Welcome. The purpose of this video is to identify the key 20 issues of CIMA Strategic Level Case Study February 2018. I am Gajendra Lianarachi from a4study.com. Let's look at the issues. First of all, the industry this time is fitness. The company is Royals Gym. What's the company? Royals Gym. The company was founded by two brothers, King Brothers, in 2009. Both invested $3 million and had a share capital of 100,000, 50% each. And then the company moved forward with ambitious targets and now has 125 gyms with 439,250 members. I repeat, 439,250 customers. Sounds familiar? Now let's think about the gyms around the world which has similar statistics. Only one has similar statistics. What's that? Correct. Pure Gym in the UK. Pure Gym in the UK commenced the business in the same year, 2009, and now the company wants to progress to 300 gyms in 2020. Sounds familiar? Yes, that's the exact target of Royals Gym, to open 300 units by 2020. Not only that, both companies are unquoted private companies. Not only that, both companies has the same operations where the customer register online and the PIN number is emailed and you access through the PIN number. So I would strongly recommend you to do some research on Pure Gym in the UK. They commenced in Leeds. Let's start with the issues. Issue number 1 is initial public offer. Why? Simple. CIMA examiner normally gives a listed company so that you already have a share price. Now it's your turn to determine the share price. That means we need IPO. Why? Let's look at the statistics from the beginning. The two brothers are ambitious entrepreneurs. They want to grow always. So they invited a venture capitalist. When was that? Very good. 2012. What is the name of the venture capitalist? Correct. GEM. I'll call it GEM. GEM invested $6 million in the company in 2012. What was the stake? 40%. So what's the market value as at 2012? Very good. 15 million. If 6 million is 40%, total value is 15 million. So GEM is a venture capitalist. They appointed 2 people to the board and they arranged us a credit line. How much was that? We have a bank loan credit facility for 45 million. Please remember that line was recommended through GEM. So if they are not there, we don't get it. So then GEM was with us for 5 years. Normally from your F3 studies, you would have learned that the venture capitalist has to get out or get the investment back. Only way is the exit route. The other option is sell it to another venture capitalist or a business angel. Highly unlikely in this situation. Be prepared for an IPO. Be prepared for business valuation. What will be the method? Very good. Not net assets, because we already have net assets and we don't have much assets. Our brand name is very important. So earnings based valuation, go through PE ratio. That will be the best method to value. And you can look at a proxy company. Why a proxy company? Because we are not listed. Do we have a proxy company? Oh yes. Who is that? Loco, our closest rival, commenced business in 2012 and got listed in 2016. So that's issue number 1. Issue number 2 is franchising. Interesting. If you look at the industry in detail and do some research, franchising is the most popular method of growth for the gym industry. If you look at Snap Fitness with 1,500 gyms around the world and Planet Fitness 1,400, not only the franchising is effective, it will allow a company to establish your brand across different countries and different continents. So we are now restricted in Highland India and we have ambitious growth target. Always you can try franchising because we have a cash flow problem at the moment. We are expecting a cash deficit in 3 years time, meaning we need to do something to facilitate growth. We cannot borrow anymore. Why? Our gearing ratio has increased from 50 to 52% and our long-term and short-term debt has increased by 46%. We have only 3 owners. Unless we go for IPO, of course, we have 5 variants. We need franchising because our owners are unable to invest further. Franchising gives us everything. We get somebody to do the hard work, somebody will select the site, and the investor will build the gym, buy the equipment, manage the staff. We get a cool 20% commission like McDonald's. Sky is the limit. Not only that, we will be able to establish our brand across different businesses. Of course, there are problems of franchising, control and brand deviation. You need to manage that. That's why you are going to be a management specialist. Issue number 3 is competition. Very interesting topic. Who is the market leader at the moment? We are Royal Gym. Why? Because we introduced the concept of budget gym to Highlandia. Founders decided to introduce this concept, which was already in US and Scandinavia. It was instant hit. Why? Because we got the market from traditional gyms. What is a traditional gym? You have the gym and all the other facilities of luxury. Sauna, steam bath, swimming pool, restaurant, pub, everything. And then they decided, why do you pay for everything? Let's pay only for the service. Pay as you use. And they introduced the budget gym. Very successful. Because of that, we still have the brand recognition and leadership. We call it in E3. What do we call it? Good. First move advantage. That's the advantage McDonald's has. That's the advantage Coca-Cola has. That's the advantage Harvard Business School has. First mover advantage. However, it's questioned now because budget gym industry, the core competence is very basic. Competence can be copied very easily. A new entrant can easily enter the market. Who comes to your mind? Very good. Michael Porter, 5 force theory. There are 3 main competitors who are very close. They are going to knock us down. Loco, already listed in major cities, targeting young customers, advertising aggressively. They have 25% of their gyms in cities. They have already attacked us. They have 294,000 customers. They are getting closer. They are very innovative. Next one, Fit for All Gym. International chain. What does that mean? Global standard, positioning, differentiation. They are already above us in the standard. Then the deadliest of them all, who is that? The latest entrant to the market, Gym Go. They are very dangerous. Why do I say that? Within 2 years of business, they entered in 2015. They were able to open 34 gyms. I repeat, they were able to open 34 gyms. How many gyms did we open in the first 2 years? Sadly, only 5. Not only that, GymGo has 170,000 customers at the moment, and they were innovative. They pioneered the online system where the customers can get connected through a mobile application and do exercise at home. And they have 15% of their customers online now. Is it a challenge? They've already taken us. These 3 have already beaten us in our own turf. What can we do? Very simple. Copy them. Benchmark. Move forward. Comparative analysis will be tested. Benchmarking will be tested. Remember, you might be the leader yesterday. You might be the leader today. But it doesn't guarantee your leadership tomorrow. Tomorrow, you can be dead and buried. So you need to copy them. You need to be aggressive. And you need to use your brand and all the power you have to differentiate in this market. Issue number 4, human resource management. Let's look at the gym in detail. How many gyms do we have at the moment? Very good. 125. How many staff do we have? We have 3 full-time equivalent. Now that's a tricky one. Full-time equivalent meaning normally we assume 8-hour day. So our gym is open for 16 hours. So if one staff member work for 16 hours, that means 2 full-time equivalent staff. Not recommended, health and safety and ethical grounds, but that is the guideline. If a staff member works for 16 hours, one member, you consider as 2 equivalent staff full-time. But let's assume that 3 staff per gym for simplicity. So how many gyms do we have? 125. So we have 375 staff here only at gym level. Of course, we have a small head office. Assume 25. We are looking at 400 staff. Fine, no problem. No, there is a problem. What's that? Do we have HR director? No. Do we have a head of HR? No. So who's going to manage the HR? Nobody knows. That's the problem. Not only that, between 10 p.m. and 6 p.m. there's no staff at the gym. Something goes wrong to a customer. Customer falls ill. Customer gets a sudden stroke. Customer dies. Who's responsible? We don't know that. That's why in the exam we need to recommend an HR plan, HR procedure. We have 4 regional managers who are paid a basic, modest, fixed salary. You don't pay fixed salary for people who manage these gyms. 125 gyms, 4 regional managers. each looks after 31. So you need to motivate them. Are they motivated now? No. So how do you motivate them? Simple. Performance related pay, or you have a remuneration system based on their performance. For that you need HR. Examiner will test this, so be prepared to develop a performance related application and how to overcome resistance to change when introducing these new systems among the staff. Issue number 5, mission and objective. What's our mission statement? Provide affordable fitness for everybody everywhere. I repeat, provide affordable fitness for everybody everywhere. Powerful mission statement. Wonderful mission statement. So this will be tested. Let's see how. Affordable. So the mission has certain things. Affordable meaning value for money. That means we need to practice cost leadership strategy. Who comes to your mind? Very good. Michael Porter, generic strategy. We are clearly a cost leader and our mission says we should always be a cost leader. Then everywhere. That means growth. So now the examiner allows you the opportunity to grow. Everywhere meaning not your own country. What's our country? Highlandia. That means we can go beyond the country. What's the strategy? Very good. Franchising. Not only that, everywhere meaning that you should be able to access facilities even from home. That means what? We need to benchmark home. Very good. Gym go. The devil, the latest competitor, do or die. We need to benchmark them. Develop a mobile app because our mission is broad. It provides us a lot of scope to introduce everywhere meaning online platform. Then everybody. Now that's a vast statement. Maybe a little bit too broad. Maybe in the exam you can recommend to segment the market a little bit. You can look at the overall mass market. That's fine. Affordability. But then if it is changing, you can develop sub-brands. Maybe working women. Maybe for young students. Maybe for adults or pensioners. Just segment it. But make sure when you segment the market, develop sub-brands. Don't use the royal name because it can deviate your mother brand. Because our main focus is cost leadership. Otherwise, Michael Porter would say you're stuck in the middle. Don't be stuck in the middle. Develop a sub-brand for other areas. Then we have an objective. What's our objective? To be a leader in gym business in Highlandia. To be the leader in gym business in Highlandia. Powerful objective. Again, we need to define leadership. How do you define leadership? Examiner will test that. Objective has to be but specific, measurable, attainable, realistic and time bound. Recommend smart approach. How do you define leadership? Either market share, number of customers or revenue growth. So make sure that our objective of leadership has to be defined based on clear parameters. It has to be specific. Either the leadership based on number of customers or sales. You can have the largest amount of sales or the number of gyms. It has to be clearly specific, measurable, attainable, realistic and time bound. Very, very important. And there are 3 critical success factors they have identified. Branding, customer retention and efficiency. So all these 3 has to be measured based on KPI. How do you measure branding? Very simple. You can look at the value of your present equity or book value, and the difference between the book value and the market value is the value of the brand. Not only that, you can look at brand recognition. You can do surveys and see when you say what's the best gym in Highlandia, how many people recognize our brand like Coca-Cola. So if people recognize your brand, then yes, you can use your brand to generate a sustainable competitive advantage. Customer retention is another critical success factor. You can test that by looking at your number of customers at the beginning of the year and at the end of the year. The difference will tell you how many have left and how many have joined in. So that is the game. Remember, mission is excellent, little bit too broad. You have to be specific, segment the market. Objectives are brilliant as long as the leadership is quantified. Good. Let's move on to the next issue, financial management. Let's settle down now. Company is doing very well. We are growing. Last year we had 86 gyms. This year we have 125. Next year we have planned 50. Following year 60. Then the following year 70. Wow. We target 300 at the end of the 3rd year. That's a lot of numbers. And we target the revenue to grow. What's the problem? If you look at the ratios, you clearly see everything is growing. Revenue is growing, customer numbers are growing, so as the person you don't like to grow. Who is that? Finance cost. Finance cost has increased by 39%. Gearing has increased. Long-term debt has increased by 46%. Short-term debt has increased by 46%. Current ratio is a disaster. Last year our current ratio was 0.3. 0.3. That means excessive current liability compared with current assets. This year 0.27. Current liabilities have increased by 45% and now it is 13 million. What does that mean? Correct, over trading. Are we over trading? Of course we are. Now that's a major problem. What's the other issue? At any given time, if our venture capitalist leaves us or sell their stake to another venture capitalist, provided there's no IPO, we will struggle. Why? Because the bank loan was arranged by the venture capitalist. So you have to be very careful in financial management. Make sure you strike a balance between liquidity and profitability. I'm not saying you should not grow, but manage liquidity and profitability. Consolidation is the key than growth. Issue number 7, threat of substitutes. What is a substitute to the gym? Anything is a substitute. I'm sure every one of us has gone to a gym. We have done cycling, we have done mountain climbing, we have done bushwalking, we have done community walks. You do exercise at home. You might have exercise bicycle or a treadmill. You do some sports. You do anything you like in the world, and if you look at your fitness, and that's a substitute. So this is a dangerous industry. Not only that, do we have customer loyalty? No, we don't. Why? Because we are a budget gym and there's no fixed contract. That means a customer can pay 1 month for your gym and then you get the news. Okay, a new gym has opened somewhere down the town and first 100 customers they give 50% off. Or for the first few customers there's additional facility. You take a chance because you have no switching cost. Clear? No switching cost. Michael Porter 5 Force theory. Oh yes, threat of new entrants very high. Because of that, substitution is a very, very clear threat. Plus, who is this dangerous competitor entered the market? What's the name? Very good, JimGo. Online platform. They have 25,500 customers already from 2 years on the online platform. That's a substitute. You don't need to come to the gym. Look at the benefit for the company. With zero cost or very negligible cost, you get income coming in and the customers are happy. That is the substitute. So meaning we cannot eliminate substitutes. We need to encourage it within our system. We have FBA group. Develop the FBA group. Organize walks. Organize cycling. Organize fitness regimes, exercise groups. Develop the online platform. Engage with substitutes. It's always better to stay with the devil rather than be the enemy of the devil. Very important. Shake hand with the devil. That's the best way to survive because this is a social product and people know about fitness. And sometimes we all know that even though you are a member in the gym, you might not go sometimes. And that means you have a substitute. Maybe you walk with your friend. That's a substitute. So it's dangerous. What's our strategy? Engage with substitutes. Develop the online platform. Issue number 8 is operations. Let's look at the present operations. You have maximum 3 staff in a gym. And gym is open plan, a large place. And that's why our property management is very careful in selecting a property. They have minimum 100 equipment in one gym. Can you believe it? 100 equipment. So assume one customer use one equipment for 1 hour. So at any given time during 1 hour, how many customers? Very good. 100 customers in 1 hour. So per day how many? Good. 2,400 customers per day. Now that's a massive volume. What's our average customers per gym? Very good. 3,514. What's the average customers per gym? 3,514. What's our maximum capacity? 2,400. I'm not saying under any circumstance that every customer will come every day. But you know, we all gone to gyms. There is a rush hour, there's a peak hour. Sometimes we struggle. Sometimes there's a queue. Sometimes you don't feel like doing it because there's too much traffic and there's less staff. So we need to manage that. Clearly, this is a bottleneck. So how do you manage that? Plenty of options. Peak hour you can charge a little bit more. You can allow the customer to select between the hours and charge more for the peak hour, rationalize the system. Maybe try to arrange better or higher facilities for gyms which are in major cities or close to the cities. Fragment the market, analyze the data and see. There may be gyms, I mean, we're talking about average 3,500 customers per gym. There may be a gym with 7,000 and there may be a gym with 1,000. Strike a balance. For that we need a strategic information system. So operations, the key strategy is identify the bottleneck and make sure you strike a balance between your resources, between your staff and between your customers. Issue number 9 is risk management. Wonderful topic. The company has done well. They have identified 9 areas of risk management. Can you believe it? 9 areas. Now that's very important. From economic risk to health and safety and customer dissatisfaction and to data security. So many. But what's the problem? If you read the lines, you see they say we monitor the risk. What comes to your mind now? P3. Monitoring is not enough. For example, health and safety. You monitor. How do we monitor that? From CCTV camera. Well, between 10 p.m. and 6 a.m. there is no staff in our gym. So you monitor from the camera and after 1 week you see the footage, somebody, my goodness, customer has died. Is that monitoring? Not enough. And the scenario says that the support is minutes away. What does the scenario say? We have outsourced the CCTV camera monitoring system and the support is minutes away. How many minutes? 2, 10, 20 minutes? We don't know that. And then there's a panic button to press. What does that mean? What if the customer faint before the panic button? You're gone. So what do I say then? Very clear. You cannot monitor. You need to develop a strategy to manage the risk. How do you develop strategy? Very clearly, you need to define these risks, 9 identified, plus additional risks. For example, we have not identified the location as a risk. Why? Because we have a lease agreement. How many years? 15 years. So we have a lease agreement for 15 years. What is the risk? Imagine you select a place close to the city, wonderful area, you upgrade the gym. After 2 years, major highway comes in, they change the bus station, they change the train station, and then they remove it to 20 kilometers from your gym. You're gone, dead and buried. Is location a risk? Of course, yes. So you can recommend, you can identify more risks. Plus, you need to develop a clear strategy to manage the risk. How do you do that? Very simply, you need to have risk management policy. Then you need to have risk management strategy. Can you remember that matrix? Oh yes, what's that? Risk management matrix. Likelihood and the probability. Sorry, probability and the impact, or likelihood and the impact. So you can have a scale of 1 to 5, 1 to 5 and rank the risk. What do we do after ranking the risk? You can rank all the 9 risks. Then you draw the line. What do you call that line? The tolerance limit. So any risk above the tolerance limit is called what? Very good. Gross risk. So we manage the gross risk based on our risk management strategy. Who is going to manage this in Royal's gym? Sadly, we don't have HR, we don't have staff to manage. So you need to recommend to have a unit to manage the risk, identify the risk and make sure you have enough control to minimize the risk to move forward. Keep that in your mind. You are dealing with the lives of people. How many customers? 439,250. So you need a sound risk management plan. Issue number 10 is IT strategy. Let's look at the present IT. Well, we have a basic IT system and we have 4 staff IT. Where are they located? They are under the Chief Operating Officer. My goodness, IT has not given an independent role. Is it a problem? Oh yes, massive problem. So we need to take IT out from this system and move it away and create a different function. And you need a head of IT. We have a chief manager, no doubt about that, but we need a strategist. Our IT is basically a data processing system. It's not strategic. What does it do? We have a website, customer register online, then we send a PIN number, customer gets into the gym and that's it. Do we have customer records? No, we don't. Do we analyze the customers? Do we have data analytics? No, we don't. Do we have online platform? No, we don't. Do we have a reception area? No, we don't. Can we communicate with the customer online? Understand their needs, customer complaints? No, we don't. So what is our recommendation? clearly you need to develop information strategy. You need to use the website to take a strategic advantage, develop an online system and get the customers engaged with the process. Get an IT man who can drive it forward and take it out from the operations. Issue number 11 is internal control. Interesting topic. Let's look at our operations in detail. Well, we have no staff between 10 p.m. and 6 a.m. We do not conduct any audit. PIN numbers are emailed to the customer and customer comes near the gym, enters it to the keyboard, goes in. Anybody monitoring that? No. Then we have self-appointed trainees. Who are those people? These are our customers who can just come into the gym and train somebody and charge a fee. Do we know who they are? We don't. Do we know their advice is correct? No, we don't. Do we take responsibility? No, we don't. So you can clearly see there's lack of internal control in Royal's gym. You need to recommend internal control. Probably you can recommend internal audit as well. Appoint a chief internal auditor. You need to do an IT audit. Do a random test on these online generated PIN numbers and do a random test on the customers who are inside the gym. Can you imagine a situation like this? You tell your friend, use my PIN code. Who's going to check it? Friend enters the PIN code and gets in. So you need additional controls to minimize unauthorized access. This is crucial. So we need internal control and we need to be aggressive and we need to test it. So audit is recommended. Issue number 12 is management of change. Let's see. Have we changed over the years? Sadly not. The two founders are still running the show. One is Chief Executive Officer, other one is the Chief Operating Officer. Is there a problem? Oh yes, there's a problem. They are dreaming. They are dreaming. Why? From 2009, they innovated. They had press releases, they had conferences, they are considered as the pioneers in the industry. Wow, they are motivated, but they are blind. They haven't taken any single decision beyond that. Remember, in life and in business, there are people who are very good in starting business. What do we call them? Entrepreneurs. They are smart. They see things. They are innovative. They are creative. But they are not the best people to take the company forward. So we need to change, but not with two owners who have 60% as the main decision makers. They need to step down. At least the Chief Executive Officer should step down and get a new person, maybe a professional from the fitness industry, to run the show. I'm not eliminating the owners. They can have their back seat and let somebody else drive. Maybe a chairman, maybe an advisory board, but make sure you get new blood into this system. I repeat, just because they started, it doesn't mean they are the best. We have already lost it. 3 competitors have completely developed 3 different strategies. We never saw it because we only look at expanding, expanding and expanding. Issue number 13, expansion and growth. Well, that's the only strategy. We keep on improving branches and gyms. Very good. What's our target in the next 3 years? 300 gyms. So from 125 up to now, for the first 8 years, 125. Next 3 years, 175 more. Wow. That's a very ambitious expansion. Very good. But what's the problem with that? We continue our existing system. We get a competitive disadvantage. Why? We have incremental strategy. What comes to your mind? James Brand Quinn. Logical incrementalism. We start something, from there move further, move further. So when we look back, all the 125 gyms looks the same facilities. Not a problem if the market domination continues. But sadly, we have lost it. Competitors come out with new ideas. Expansion is dangerous. Why? Because we keep on investing into new lease agreements, whereas our competitor, what's that competitor's name who is dangerous? Very good. Gymgo is developing online. So one good day, we might open a wonderful location, excellent gym, brilliant facilities. Nobody will come to the gym. Everybody will be on the mobile app. That's why the expansion should strike a balance between other products. Don't forget the cash flow. Don't be blind. So strike a balance between cash flow, expansion strategy and alternative options such as online facilities, and slow down. Slow down is our advice. Issue number 14 is structure. Let's look at their current structure. What is the current structure here? Very good. That is a functional structure. You have functions. How many? Sadly, only two. Finance and marketing. Then we have Chief Operating Officer. That is Frederick King, the founder brother. Under him, you have property management. You have 4 regional managers. And sadly, IT under him. Shocking. Is he IT man? No. He is into property development. That's what I said. IT guys are just doing basic data processing. This is not going to work. We need to change the structure. Not only that, we need to introduce a new function. Maybe push IT from this function, push it up and allow a new platform. I don't think the current IT managers are capable of strategy, because they are under the Chief Operating Officer. They will not have that additional thinking and courage. Get a person from outside. Maybe you can hire a person from Jim Go. Get their best IT man. That's how you face the competition. You need to punch it. And that's the game. Fire with fire. Never take a backward step in competition. Game on. So we hire their IT director. Sky is the limit. Okay, that is one way of looking at it. Then do we need HR? Yes. We don't have an HR function. So appoint HR. Then functional structure, has limitations. What? Very slow and ignores the customer needs. So who are our customer? All these customers and members come to the gym. How many? 439,000. How many gyms do we have? Very good. 125. Who manages them? Regional managers. But sadly, they are under the Chief Operating Officer. So what do? Very good. Introduce a matrix structure. Get the regional guys to this side. Get the functions here. So regions here. Each regional manager can look at the local needs. Maybe he is in a local area where 15 gyms have particular needs. Get him to take a decision. Of course, get the approval from the head office. That's why the matrix is there with functions. So one regional manager, let's say Smith, can cater for 31 different gyms with a local interest and local area. So you can do local promotion, understand their needs and stay focused, which is very important. So what do we recommend? Matrix plus have additional functions. Issue number 15. Corporate governance, CSR and ethics. Why did I integrate 3 concepts in one? I repeat, issue number 15. Corporate governance, CSR and ethics. Normally we consider them independently. Think a minute. Very good. Are we a quoted company? No, we are unquoted private company. So corporate governance is not directly applicable. What is the corporate governance you learn in CIMA? Good. UK standards, the combined code applicable for a UK listed company. Well, we can learn, of course, CIMA examiner would say you can use that for any listed company or even for a non-listed company as a learning. Definitely yes. The established corporate guidelines can be used for even a non-quoted company, but it's not a must. That's why I am combining this. Clearly, we only have very limited directors, only 4 directors and 3 non-executive directors, including a non-executive chairman. So corporate governance principles will say have more directors. The directors are clearly inadequate. Have HR guy and IT guy. Then have at least another couple more non-executive directors, because they were appointed by whom? Very good, by the venture capitalist. So we can take the initiative and appoint few non-executive directors. CSR definitely will be tested. Why? Between 10 p.m. and 6 a.m. there's no staff. Is it CSR? Of course yes. You are responsible for your customers. You can't expect them to press the panic button. They'll die before pressing the button. So your responsibility is very high. You must go through this, because we need to have enough staff. Plus, if you look at CSR, how many maximum staff do we have? 3 per gym. And how many equipment? 100. And they are supposed to do the cleaning and basic maintenance as well. Impossible. So you have a social responsibility to look after that. Don't forget the triple bottom line. What's that? People, planet and profit. So look at people. They have ignored that. Ethics, CIMA guideline. We have one supplier top kit. Make sure that they operate with ethical guidelines. This can be tested. CIMA 5 ethical guidelines. Be careful, not through us, mainly through our outsourced parties, because we have outsourced everything. So be prepared for a question to test the ethical perspective of their business conduct. Who? Outsourced parties. Right. Issue number 16 is KPI and forecasts. If you look at these KPIs, You have a brilliant KPI system. Each year, massive growth. What's our current revenue? Very good. 77.3 million H dollars. After 3 years, it goes to $220 million. Can you believe it? Now 77.3 million. Next year 114 million. Then in 2020, 220 million. 43% growth each year. Last year 35% growth. What comes to your mind then? Looks a little bit over ambitious. Did you get the clue? Oh yes. Why do they show all these extravagant performance measures? Can you smell it? Oh yes. They're going for IPO. They're going for IPO and the paper looks perfect, isn't it? You need to develop the prospectus, and where the shareholders will look at the numbers and think, this is where I'm going to invest. Purely the KPI is for that. So don't be surprised if you get IPO. But overall, the KPIs are over ambitious. Sadly, if you look at the cash forecast, what is our current cash balance? Very good, $1.3 million. End of 2020, closing balance is 14 million negative. Can you believe it? 14 million negative. We already discussed that we are over trading. Now that's a massive problem. So you are expanding with wonderful targets with revenue and customer numbers, but you don't have the cash position for that. Plus, we are highly geared at the moment and our borrowing has gone up significantly. So clearly a mismatch. Your growth goes this way and your cash flow comes this way. So you need to recommend to strike a balance. What's our recommendation? The property development team, it's probably emotional. Who heads that? Chief Operating Officer Frederick King. He's a property man. He sees a property, he gets motivated, he gets a kick. Let's do a gym here. Let's get this property. You need to tell Frederick, slow down mate. We need to consolidate with whom? With finance. Who are you in the exam? You are a senior manager finance. Slow things down. KPI over ambitious. If you go for listing, that's fine, but strike a balance between cash flow and KPI. Issue number 17 is outsourcing. If you look at the whole case study, we have outsourced cleaning, we have outsourced security CCTV cameras, we have outsourced equipment maintenance, we buy equipment from Topkit, the pioneers, and also we do have a security separately outsourced. Everything we have outsourced. What does that mean? We need to develop a code of conduct. We need to test what they are doing. We need to supervise them. That's why I said earlier, the regional managers, how many are they? There are 4. They need to be paid a better salary. Motivate them, because you're asking so many from them, you're not paying them. The problem with outsourcing is you need to monitor them regularly. Plus, we have only one equipment supplier, Topkit. Not only that, we depend a lot from them. We get a bulk discount. Why? We buy in bulk. Because we have 100 equipment per gym. So because of that, we get a bulk discount. Very good. I have no problem with that. But what's the problem? The creditors. We have a massive creditor amount shifting from 9 million last year to 13 million. 45% growth. So what if at any given time Topkit says, look here, we can't give you the discount, pay cash up front. We will struggle, because we are financing our working capital largely through the overdraft and through creditors, not from cash. Our cash is very less. So clearly we are over trading. Plus, what comes to your mind? Very good. Depending on one single supplier. Who comes to your mind now? Michael Porter 5 force theory. You see Michael Porter everywhere in this case, and you see E3 everywhere in this case. So that is threat of what? Bargaining power of suppliers. Recommend to have an alternative supplier. I am not saying under any circumstance to change them. Please do not violate the relationship with Topkit. They give us bulk discount. But to minimize our risk, have another person in the pipeline, maybe 2 small companies. What if our major supplier or the only supplier is bankrupt? We are gone, dead and buried. You're opening gyms, no equipment. So remember, outsourcing is good. Monitor them, audit them, get the regional managers to report once a week on the developments. Very important to monitor. If a gym floor is not clean, if the customer slips and falls, because there's water, your brand name is gone and the competition is very high. Who is that deadly competitor? Very good, Gym Go. They'll take us for lunch. Remember that. Issue number 18 is property management. We have 2 senior property managers. Who is the boss here? Our good old friend Frederick King. What does he see? Only location. Location, location, location. Meaning he's aggressive. But the danger, we pick locations and if the market change. That is the problem. Already we have 125 gyms. What is the total number of gyms in Highlandia? Very good, 1500. Out of 1500, 600 are budget gyms. We were the pioneer, we were the founder, but sadly we only have 21% of the market in the total budget gyms. We have 125 gyms, and other 3 players within 5 years, other 3 competitors within 5 years has developed 166 gyms. That means we can't beat them. So don't try to beat them, because when we think about getting a land, maybe 10 other competitors might enter. Are there entry barriers? No, because it is what? Pay for use. Fees are very less. No brand loyalty. Very difficult to create entry barriers. So it is dangerous continuing our present property management policy for 2 reasons. Number 1, market is changing. Market has become online. Competitors offer advanced features such as fitness studio and exercise classes. We are not offering anything. We don't even have a reception. We don't even speak to the customer. So how are we going to differentiate? What's the next catch? Our internal problem. We have a cash flow deficit. 2020 end. What's our cash flow deficit? Very good. That is 14 million. So tell the property management team to slow down and recommend property management integrate effectively with finance where you operate. Very important. Survival is the key. You have to strike a balance between long-term ambition and short-term survival. Issue number 19 is future strategy. Let's see. Are we ready for the future? No, we are not. We continue the same bricks and mortar model from 2009 up to now. Brothers are very happy. It's their dream. One is into real estate, other one into sports. What do they see? One guy sees land, property, other guy sees the equipment because it is into sports. They don't see reality. They are dreaming big. They need to wake up now. Knock the door. 2 guys has to wake up. Why? Our future is changing. Number 1, competition is aggressive. We need to benchmark competition. We need to differentiate. How? Include programs, maybe dancing programs, martial art classes, yoga classes, have a reception area, allow facilities. We don't even provide snacks. Our snacks are provided through vendor machines, through a contractor. Are they bothered? No, they are not bothered. I mean, there may be 3 weeks without water. So it's a danger. We need to be concerned for our customers. Have a snack bar. Put a staff member. You might think it's costly. Yes, it is costly. But being bankrupt and not having any customer is a serious cost than helping the customer. Remember, retention is difficult. Brand loyalty is not there. So you have to build it. We cannot continue with this model. So for the future, we need to differentiate with features. Plus, we need to develop a mobile platform. Who has it? Jimgo has it. Mobile platform, differentiate, develop proper software system, analyze the customer needs, give them personalized advice, get the analytics right. That is the future. And please focus on franchising. That's the best way to grow. And do not go for this dream 300. Make sure you have enough capacity for the future and listen to the market. Normally, when you're the market leader, when you started the business, when you experience success continuously, you become blind. You become blind. And that has happened to so many companies throughout the world, from Encyclopedia Britannica to Ford Motor Company to General Motors. Every large company has faced it. That's why Tom Peters says, large is ugly, small is beautiful. What did he say? Large is ugly, small is beautiful. We need to innovate, we need to benchmark, and we need to change and copy others. That's the only way to move forward. Issue number 20, industry analysis. Let's look at the industry in detail. The gym market is now polarized with traditional gym, high-end, very expensive, and budget gyms. The middle level has totally gone. Basically, it is not there. So we have our low end and the higher end. We are a cost leader. Who comes to your mind? Michael Porter, generic strategy. Then the population is 32 million in Highlandia, and at the moment 14% of the population come to the gym. But there's not much significant growth. In 2009, when we started, it was 10% of the population. For the last 8 years, the growth was not very good. That's why when we started this gym, we had 4,500 members per gym. How many do we have now? 3,514. Can you believe it? In the last 8 years, there's a dramatic fall in average members per gym for us. And generally, why? New competitors have come, market is aggressive, industry is fragmented. Don't be surprised you get fragmented gyms like women's only gym or working women or pro gym for professional athletes or gyms for weightlifters only. You never know. There can be smaller niches coming in the market. Narrow focus strategy, generic strategy, Michael Porter. So that is the industry. Best way to survive is move ahead. Please don't wait. We have already waited and we need a leadership change definitely. We talked about it. There will be resistance to change, but one of the two brothers has to step down. I prefer if both can step down, but they might not. They can have their control. That is the way to look at the industry. Plus, online is the game. Who is that competitor? Very good. Jim Go. 2 years, 170,000 customers. I mean, look at our own selves. We are really busy. We travel around. Let's say you have free time in a park. You have your mobile lab. You can do some exercise. You save time. You don't need to take the whole mindset, okay, I need to go to that gym. You need to have your clothing, your towels and your gear and the traveling time, and then when you go there you see a lot of other members and there's a rush and the equipment you want to use is using, another person is using it and another guy is there for the queue. You're demotivated. So the world is changing. Franchising is the key. Differentiation is the key. As I told you, we have a Facebook and a Twitter account, Royal Gym, but we need to use Facebook to our advantage. Use it. Have programs, monthly program, maybe customer of the year, customer of the month. What do you mean by customer of the month? You can say this customer lost the most number of kilograms. Everybody likes to lose weight, including myself. So that will be a high motivating factor. You can have that in the Facebook and everybody likes that. People are motivated. Then you can have these programs. Get them engaged. Maybe once a month at each gym you have an event. Okay, we have 125 gyms. You can easily cover the whole year. Event, maybe walk for fitness, something like that. Get the industry moving. I repeat, when we started, there were 99.5% market share for traditional gym. I repeat, 2009, 99.5% market share for traditional gym. Budget gym, 0.5%. That's our two branches. Gradually the traditional gyms slowly moved out from the market. Now the traditional gym market share in 2009, how much was it? 99.5. Now it is 58%. 2009 when we started, market share 0.5%. Now 42%. Next year 2018 it is going to be 50%, and budget gym is going to take over. But sadly our leadership is not going to continue. Our growth has not been consistent. Budget industry is growing, we are not growing. New competitors are growing. It's do or die. We need to dominate. We need to develop a sustainable competitive advantage and move ahead of the industry. That's why I feel the brothers did their part. They saw it. They were dreamers, they were entrepreneurs. They saw it in America, they saw it in Scandinavia. They did a wonderful job in 2009. Please don't look at the past. Past success can kill your future success. Focus on the future. Dominate the market. That is the most important thing. An industry is changing. It is fragmented. Loco target young customers age 18 to 23. So that is the way we need to segment the market, look at new areas and start dominating. Please move away from the comfort zone. Royal Gym, the future is on innovation and on domination. Good luck for your exams. You can visit a4study.com for further information. Thank you.